Hi everyone, and welcome back to Market Vibes, where we try to make sense of the market and find ways to beat the street. I'm your host Kosti, and today we're going to be talking about Nike, everyone's favorite athletic gear, sports gear. You know, the swoosh that just does it, or at least tries to, in this competitive athletic wear game. If you don't know where the name Nike or Nike comes from, it's from the Greek goddess of victory. It's a fitting name for a company that's been dominating for decades, and that should also clarify the correct pronunciation of the name Nike. It's actually Nike. Before we jump into the numbers, let's address the elephant in the room, because that's why you all came here. If you don't know where the name Nike comes from, it's the Greek goddess of victory, fitting name for a company that's been dominating for decades. And that should also clarify the correct pronunciation of the name Nike, which is actually Nike. Before we jump into the numbers, let's address the elephant in the room, because that's why you all came here. Where is Nike going to be 6 months from now, middle of the 2026? I'm going to tell you the number, which you may or may not agree with. Therefore, you should watch this video so you understand why I'm saying it there. Based on everything you're about to unpack, the valuations, sentiment, insiders, and more, I see Nike trading at around $80 to $90 in the middle of 2026. All right, let's break it down chapter by chapter. Fair value. As usual, we are determining Nike's fair value using three classic methods: Peter Lynch approach, Warren Buffett, and the good old discounted cash flow. So I dug into the latest financials and projections. Revenue's been flat to slightly down, but analysts expect a rebound with revenue around $49 billion for fiscal 2027 and expected earnings per share around $2.50, $2.54 for the fiscal 2027. If you are wondering why we are talking about 2027 when we just started 2026, it's because Nike's financial or fiscal 2027 started in June 25 and ends in May 26. That is Nike's fiscal 2026. Second half of 25 with the first half of 26. There's just a freedom that companies in US have to set their fiscal year as they wish. So first up, Peter Lynch method, and I'm not going to bore you with the formulas. I will just give them to you as I get them from the research that I do. So fair value using Peter Lynch's method comes to 23 and around $23 to $24. Bummer, that's really low compared to today's pricing. Let's look at what Uncle Buffett would say. Using Buffett's method, we get a fair value of around $48, which is closer to today's value, but still a little bit lower. And if we look at it via the discounted cash flow, if we're going to use an optimistic 12% growth, then we can see an intrinsic fair value of around $90 per share. If we're going to look at a pessimistic 5% growth, then we're going to see a fair value of around $35 to $40. So all these formulas are kind of voodoo in a way, because any small change any small change in the input can make a huge difference in the output. Therefore, I never base my decisions blindly on fair value alone. And as you can see, they can be quite different depending on which method you use to determine that fair value. And when you have to estimate 5 to 10 years of growth into the future, it's really a game of trying to be as accurate as you can, but a few percent can really change the number that you will get. And it's very hard to be accurate what the growth will be 7 years into the future. Now the question is, what happened that caused Nike to fall from that 2021 high to where it was almost 8 years ago? There's a few reasons, but the main one is that it stopped growing at the rate that investors expected. Can it still go down? Possibly, but I don't think it can go much lower. We have a new CEO. His name is Elliot Hill. He is a Nike insider. He worked from 1988 until 2020 when he retired, and he now came back as a CEO. I think this move is a good move. John Donohue, the previous CEO, he was an ex-eBay executive. Elliot Hill is a Nike insider, a man who grew up in the industry. He may be for Nike what Steve Jobs was for Apple kind of move. There is a lot of expectations from him, and the vibe is good with this one. Let's look at the numbers quickly. Okay, so Q2 2026 second quarter revenue were 12.4 billion, up 1% on a reported basis and flat on a currency neutral basis. Wholesale revenues 7.5 billion, up 8%. Nike Direct 4.6 billion, down 8%, and this is something I already mentioned earlier. Gross margin decreased 300 basis points to 40.6%, and this is quite significant. Diluted earnings per share was 0.53. Nike is in the middle innings of our comeback, says the new CEO. We are making progress in the areas we prioritized first and remain confident in the actions we're taking to drive the long-term growth and profitability of our brands, said Elliot Hill. This is usual CEO language, and nothing really stands out from here other than what we already know. Let's move on to the numbers. And we have revenues 12.4 billion, up 1%, just like we know already. And this is in red here, something that is a little bit concerning, the growth of the cost of sales, which is mainly tariffs. That's what it actually means. And this is what caused mostly the 30% drop in gross profit. The higher cost of sales that they had in North America. And gross margins, as you can see, 40.6 versus 43.6, so that is 3.6% down in gross profit, like I said, mainly caused by the rising cost of sales. And if we go down to net income, we have 792 million versus 1.1 billion, down 32%. This is something that most investors did not really like, despite the positive speech from the CEO. Earnings per share 53 cents, and dividends, as you all know, Nike is paying dividends. We have 41 cents per share. Not bad, but not great either. Just around 2.7 per year, 2.7% a year that you can get in dividends. Balance sheet looks pretty good, and the only one thing I want to point out to you guys here is the fact that the long-term debt is easily serviceable, and they can actually pay it off completely with their cash equivalents, which is a good thing. That means company is pretty strong, and debt ratio is really negligible. Chapter 2, social media. General mix of feelings there, leaning a little cautious. You know, Nike double beat and stock plunges 5%, or is this a buying opportunity? These are the kind of posts that you will find on X or on your social media in general. Bullish percentage hovers around 50-60% based on recent chatter, with bears pointing margin pressures and China weakness. Overall, it's kind of neutral to slightly positive, with some seeing value at these levels. Chapter 3, super investor attention. Who is betting big? An important chapter here, guys. And we see some interest. It's about 8 funds with around 15 million shares in total of ownership. 2 of them added in Q3, some reduced their exposure. No major names though, no individual super investor like the names that you are used to hear, Buffett, Burry, and all of those super investors. I have not seen any of them buying into Nike yet. Let's go to chapter 4, insider transactions. Are the bosses cashing out? Another big chapter here, guys. Let's look into it. Would you, first of all, let's ask this question. Would you buy into a company knowing that the owners are cashing out? Or would you rather buy in a company knowing that the CEO and the top directors are going and buying shares on the open market? Well, let's see what's happening with Nike. I looked back for the past 2 years and compiled all of the insider transactions for you. So there's been 37 transactions, not counting grants and all of that other stuff, just buys or sells. 37 transactions, of which majority are sales with a net outflow of around $50 million. There was in total 98 million in sales and around 40 million in buys. Now, most of the transactions are executives cashing out their stock options plans and buying more yachts or private planes or, you know, new mansions. Maybe a little more than I would like to see. But here's the good news, and this is a big one. The last 2 purchases are really major, and this is what actually moved the needle on Nike in the past week or so. Tim Cook of Apple, yes, who is also on the board of Nike, bought 50,000 shares worth $3 million. Now, if that's not good news, then I don't know what is. I would consider that a good news. One of the directors also bought around 8,000 shares. I think these are generally good signals that people think this could be the rock bottom for Nike, and that they trust the new CEO, Elliott Hill. So let's go to the next chapter, red flags. Do we have any red flags? Bad press, you know, massive insider selling and things like that. Well, as we talked earlier, there is insider selling, but it's not massive. It's not they don't bail out kind of thing. It's just executive cashing out their paychecks. Bad press, you know, like for any other company, again, nothing major, just your regular forced labor concerns with factory workers in Cambodia and cotton chain and all of that things, which, you know, they're not new, they've been around for a while. Nike's been doing a good job navigating those legal issues. Short interest. Well, short interest is you should always look at short interest when you buy a stock. If you see short interest at 2-3%, that's normal. That is what most of the companies will always see, and it will fluctuate a little bit, maybe up to 5%. If you see short interest above 10%, that's when you should start to get worried whether you should even buy into that stock. So 3% of float, nothing to worry about here. The shorts are not piling up heavily, which is, it's kind of neutral. Overall, some ethical red flags in supply chain, but nothing flaming hot that derails the business. Let's look at the competition. How's Nike's competition? And you will see that Nike's competition is fierce. I mean, you got Adidas, you got Puma, Under Armour, Lululemon, and just to name a few. And if you know of a company that you think can dethrone Nike, please drop a comment. But I think there will be probably more than one that can eventually dethrone Nike. So while they currently have the biggest market share at 28%, we must not forget that when they came into the market, there was somebody else who had 28% or 40%. And just like they took somebody else's market share, at some point in the future, it could be that somebody else will take their market share. So currently they have 28%, Adidas 14%, Lululemon 6%, Puma 5%. It's a high entry barrier. Brand loyalty, supply chain scale, innovation is not an easy entry barrier for most of the competitors. Let's look at chapter 7, return on investment, the long haul. Let's say you bought the whole company at current market cap of 97 billion, assuming net profits grow at the recent rate. Latest projections, fiscal 2027 net profit around 3.8 billion, based on $2.54 earning per share, growing at 12 to 15% annually, long term. How many years before you can recoup your money? If the growth stays at 20% year over year, you will get your money back in about 25 years, which is decent for a consumer brand and a quality business. People expect steady growth in staples like this. However, if growth slows to 10% per year, year over year, then this period can stretch to over 35 years, and that is a little bit way too long when you can get 10% in an S&P 500 ETF without taking on so much risk. So if there's any business you're going to invest in and it doesn't generally bring you more than 10%, then you should probably be into S&P 500, because any single business is more risky than the S&P 500 altogether. So conclusions. Is current price a good entry point? Well, at $60 a share, it's trading slightly above the fair value. Can you judge this company using old school metrics? Yes, and it looks reasonable, but there is room to go even lower. However, I don't think we will see it below $50. So my feelings is that this is a good starting entry point. And if it dips a little bit towards 55 or even towards 50, then you can just buy some more and you can lower your cost. And remember, this is just my take based on the data and the research that I did. The decision is yours. And if you like this kind of analysis that I do on individual stocks, drop a comment. Let me know which stock you would like me to look at for the next video. And then like and subscribe so you don't miss it. And see you next time.